Right now, and this is important, with a well-timed headline out moments ago, Tyson's Foods, which is really part of the barometer of this nation, with a revenue upgrade. That's all you need to know to get to Michael Purves of Tallbacken Capital. Michael, buried in your note is way too much revenue optimism. Why does the Gloom crew misjudge the revenue optimism that you see?
Well, I think in part because there was in Q2, we had a series of economic data that underperformed the expectations here. But again, it gets a little bit into this notion that the U.S. Economy is not completely reflective of what happens in the S&P 500 revenue and earnings streams there. So I think that's part of it. But I also think it's a real testament to the fact that corporations, in 2020, when the storm hit, were really pretty good at navigating through that, and as the economy is recovering, I think they've also been proven to be pretty agile maneuverers of this tricky economic condition there. And then, of course, you have some of the backdrop, like stock buybacks have been an important source of what you could call synthetic earnings growth to help smooth things out as well. Of course, that doesn't help the top line there as well. But at the end of the day, I think the corporate earnings are it's an interesting contrast with the earnings and revenues beats in this quarter, the second quarter, where the economic data has really sort of underperformed. It's a real testament to the corporations.
Until Friday, when payrolls really started to come back in a big way. Big concern, Michael, I think, for a lot of people. Margins look great now. Can we continue to insulate those margins if these supply constraints persist into year-end? Do you share that confidence, Mike?
Well, look, I think two things. One of which is that, here we are. We're more than halfway through the year. If the margin misses are because of supply chain issues, because Ford can't sell cars because of the chip shortage, if it's related to those facets, I'm not particularly worried, because I think that ultimately means people will buy a Ford truck or car in 2022, which frankly is really what the market needs to look at, is a stronger 22 right now. If it's really because of something, if the margin misses are because of it's something, really because of some, more structural forces related to sustained cost increases, particularly labor, that's going to be different. But I think, again, that conversation, John, is extraordinarily company and sector specific, right? If you look at big cap tech earnings, they've had wage pressures. They have to pay very high programs and so forth, very high wages, really since their company's foundings there. Whereas companies like Walmart, for example, are going to be much more vulnerable there. But I don't know if we really have the data yet on whether the margin compression, even at the very economically sensitive sectors, it's going to be that problematic.
Michael, just to build on this, Michael, just to build on John's point here, there is an argument that consumers have been more willing to absorb higher costs because their savings are so bloated from the checks they've gotten from the government, from not going on vacations. However, that tolerance will fade over time as those savings get eaten down and they can start spending on more things and experiences. Do you buy that it will become harder for companies to pass along higher costs, regardless going forward, just simply because the consumer will be more discerning as life returns to normal?
That's a very good question, Lisa. Look, I think again, it's a little bit name specific. I think there's going to be, and it's also about timing too, right? So you can look at materials names in like the steel sector, where steel prices have not done the lumber thing of giving all their gains back.
Interesting, that lumber thing.
Right. But they're very. The steel futures curve is very robust throughout 2022 at record levels here, right?
Yeah.
So the steel companies have been able to pass off their higher prices on to their customers, meaning the companies that manufacture goods.
Michael, we gotta leave it there, Michael, just because of the Monday schedule. But thank you for your optimism. You saved the show. Michael Purves with Tallbacken Capital.